Hello traders, and welcome back to the Forex Geek. In today's video we're going to be talking about a powerful bearish continuation pattern that often signals further downward momentum in a declining market. So we're talking about the downside Tasuki Gap. So this pattern is a clear signal that sellers are still in control, and it can help you identify when a downtrend is likely to continue. So by the end of this video, you will know exactly how to spot this pattern on your charts and how to use it effectively in your trading strategy. So stick around to learn how you can take advantage of this reliable candlestick formation and improve your trading decisions. So without wasting any much of your time, let's get started. So first, let's understand the downside Tasuki Gap and what it's made of, its characteristics, and how to spot it, how to identify it on your charts. So, the downside Tasuki Gap forms during a clear downtrend and consists of three specific candlesticks that tells us a compelling story about market sentiment. So the first candlestick is a long bearish candle showing strong selling pressure as price closed significantly lower than the opening price, and this indicates that sellers are firmly in control of the market. This is usually the first candle, and it's supposed to be a very long candle, a long bearish candle showing that sellers are in full control of the market. And the second candlestick is another bearish candle that opens and closes lower than the first, creating a visible gap between them, and this gap represents the bear's eagerness to continue selling even at lower prices. This is your second candle, and there should be this gap between the closing prices. Should be a gap between the closing prices of the first and the second candle. Now the third and final candlestick is a bullish opening. It's a bullish candle opening with the body of the second candle and moving upward into the gap. However, it fails to close the gap completely. So this failure is significant because it suggests that despite buyers attempting to push price higher, they lack the strength to overcome the selling pressure. So when you spot this pattern forming in your chart, it's telling you that despite a brief pause in the downward movement, sellers are likely to regain control and continue pushing prices lower. So this makes the downside Tasuki Gap a reliable tool for confirming the continuation of a downtrend. So without wasting your time, let's hop on the charts and try to spot this downside Tasuki Gap. So you can see this one right here. I've circled it already, and the first candle is expected to be a very long bearish candle, and that is, you can see it's very clear. And the second candle should be a bearish candle also, creating a gap between the first candle's close and the second candle's close. Now the third candle should be a bullish candle, which should tread into this gap that was formed between the first and the second candle. And you can see the third candle, which is this green. Let me zoom in. The second candle, which is the bullish candle, closes in the gap, but it fails to go above this gap. It shouldn't close the gap entirely. It fails to go above this gap, and that shows that sellers are still in the market and are looking to push prices lower. And that is confirmed by the fourth candlestick, which obviously closes below the third candlestick and even below the second candlestick, so pushing prices significantly lower. You can also see volume confirming this with higher selling volume within this time, and there's increasing selling volume. At the same time, we had this candlestick downside Tasuki candlestick pattern. So those are key things to watch out for when you are looking to identify this candlestick pattern in your trades or in the chart. And let me check if I'm gonna see another one. And we have another one here, but this didn't exactly go as planned, but I'm just gonna use it to illustrate how it looks like, how the candlestick looks like. You can see the first bearish candle significant bearish candle, and followed by the second candle. Followed by the second candle, which is this one, and the third candle, which doesn't exactly close the gap. You can see the gap there. Now, before we take this trade, we should expect a candle close below the third candle, but it didn't exactly give us that, so price continued to the upside. So it's always important you confirm your trades, because things like this can happen. And also look for another example. All right, so you can see the first candle is a large bearish candle right here, and the second candle is another bearish candle which creates a gap between the first and the second, and the third candle didn't close that gap, showing that sellers are still in control. And for the next few days, we were able to continue that bearish trend. Should expect price to close below this candlestick before we consider entering any bearish trades. That was how we were able to catch this candlestick, downside Tasuki candlestick pattern. And aside spotting this candlestick pattern, how can you use it to trade? Let's discuss trading strategies involving the downside Tasuki candlestick pattern. So now that you know how to identify the candlestick pattern, one of the most straightforward strategies is to enter a short position after the third candle confirms the pattern, but you should wait for a close below that third candle. So I've already talked about that. You should wait for a close below, a candlestick close below the third candle or the second candle. If you are more conservative, you could wait for a candlestick close below the second candle, or if you are not, you could wait for a candlestick close below the third candle, and that should give us a confirmation to enter short positions. And stop loss should be above the third candle, and take profit levels could be a 1:1 or 1:2, or anyone that is in your preference. So this didn't exactly work as planned, because price was bullish in this case, and this was just a short position to this trend line support, and to continue the price upwards. So we aren't expecting to short it, to keep our short position for the longest period. And you can see this also coincides with this resistance level, so it was another added confirmation to consider entering this short position to this trend line. So you could just maybe spot this candlestick pattern on the daily chart, which is where we are right now, and maybe scale to down lower time frames like your 1 hour or your 2 hour to find better entry points. So that was how we were able to catch this. Let me look for an example and show how we could confirm the trade. So this trade, for this particular trade, that didn't go exactly as planned. We were bearish, as you can see by this frequent touches of that trend line, and we had this, and it's expected that we should take out this support level right here. We should be targeting this support level, and after we had this, we were expecting price to close below the third candle of the downside Tasuki candlestick pattern, but price didn't exactly close. Price instead gave us a wick below that and closed above it. So we should be waiting for a close below the downside Tasuki candlestick pattern, but we didn't exactly see that, so there was no short position trade right there for us. But the trade context, the overall market context was bearish here, so this was a good trade to be looking out for. You can also see the rise in selling volume. There was much of selling volume around that area where we had the candlestick pattern. So let me look for this example where it did work for us. So we were bullish initially, and this was just a pullback. this was just a pullback, and this right here was just a pullback. So we're looking for short trades for this pullback, and as you can see, we had this downside Tasuki candlestick pattern. So it was wise to be looking for short trades into this trend line support right here, which we had right here. So we had this downside Tasuki candlestick pattern, and we had the close below the third candle, which happened right here. So the short position should have been somewhere around here, or you could just scale to the lower time frames to find a better position, because we are on the daily chart right now. And to be better off, you look for a short position around the 1 hour after the confirmation of this hour downside Tasuki candlestick pattern. Another thing you can do to increase your win rate with this pattern is to combine it with moving averages, like your 50-day moving average or your 200-day moving average, as it will add extra confirmation that the downtrend will continue. So in this case, you can use moving average as dynamic resistance and place your entry when price touches or retests the moving average. So let me quickly add the moving average, and you can see price going below the moving average. Same time we had the downside Tasuki candlestick pattern. Let me just change the period to the 20-day moving, or let me use the 50-day moving average. Okay. All right. 50-day is quite extreme. Let me use the 20-day moving average instead. All right. Now you can see after we had this downside Tasuki candlestick pattern, you can see price moving below the 20-day moving average, signaling to us that we should be looking for selling opportunities right here. And for our other example, okay, this one didn't exactly go as planned. So exactly, look at this one. We were below the 50-day moving average, and we just had this retest right here of that moving average right here. So it was a very good confirmation to look for short positions after spotting this downside Tasuki candlestick pattern. But it's wise to do it in the lower time frames also, because we are in the higher time frames, which is the daily, looking for this pattern. So no matter which strategy you choose, always ensure proper risk management. A good rule of thumb is to aim for maybe a 1:1 or a 1:2 risk to reward ratio, meaning your potential reward should be twice or as large as your risk. So by combining these strategies with proper risk management when trading with the downside Tasuki pattern, you can increase your chances of success. So right traders, we've come to the end of today's video on the downside Tasuki Gap pattern, and remember, combining this pattern with other tools like moving averages or support and resistance levels will give you a stronger edge in the market. So if you found this video valuable, don't forget to hit the like button and subscribe to the channel and turn on the notification bell so you never miss out on future trading strategies. So thanks for watching, and I'll see you in the next one.